was, very low inflation, very low unemployment everywhere in the world before the pandemic. Then the pandemic comes in and really knocks everything sideways. Then we have this remarkable, particularly in the United States, response, incredibly fast recovery, faster than anyone hoped. And then we have inflation. And so that's a lot right there. And then we have a war. And now we're realizing that COVID is still really with us. So what I'm thinking about is a couple things. One is, how is this? Are we going back? Probably not, to the old economy. What's the new one going to look like? The other thing, maybe more pertinent to your question, is in the middle of this is a labor market in the United States where people can get paid well. It's too hot. It's unsustainably hot, but notwithstanding it, it's a very, very good labor market for workers, and it's our job to get it into a better place where supply and demand are closer together. But I'd say that's how I'd respond.
In the upside category, risk, you're saying wages are good, people can get jobs.
I think there's a lot to like about the U.S. labor market, but I'd be the first to say, though, that it's not sustainably hot. But I do think with our tools, we can get supply and demand better aligned.
Will you stop tightening even if inflation is still above your target?
Well, so first of all, you asked about a soft landing. Basically, that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession. That's our goal. And I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our very best to accomplish that. And it's absolutely essential to restore price stability. Without price stability, really, the economies don't work without price stability. We need that to have a strong labor market for an extended period of time. We need it for financial stability. So we must do that.
Coming in the next 3 meetings as of this morning. Is that reasonable?
So I try not to comment on specific market pricing for things, but I will just say this: at our last meeting, and this was in the minutes from the meeting, many on the committee thought it would be appropriate for there to be one or more 50 basis point hikes.
Are you one of those people?
I don't disclose my own path. I try to lead the committee, but so I think. I think markets are processing what we're saying. They're reacting appropriately generally, but I wouldn't want to bless any particular market pricing. The thing I want to say, though, is we really are committed to using our tools to get 2% inflation back. And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front end loading whatever accommodation one thinks is appropriate. So that does point
yes.
That points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting. But I would say that 50 basis points will be on the table for the May meeting.
2 more points of Mia's list, if I may. The first one is the issue of debt. In 2020, debt levels have jumped for an understandable reason, to put a floor under the economy. Largest increase since the Second World War in 1 year. In 21, it was easy because interest rates were low, access to financing abundant. For some, it was cheaper to pay for more debt in 21 because of this drop in interest rates. 22, different. In 22, we have to brace for quite a number of low-income countries, some middle-income countries, to hit the wall. And we have to be honest, that requires upfront action by the countries themselves. Do all you can, extend maturities. If you have currency mismatches, fix it. But also for us, and the IMF has its own responsibility, we have to help countries restructure that early. And if we don't, down the road this year, we may be in a very difficult place. You
at my core inflation. So if you take out food, you take out energy, I'm down to 3%. It is north of my target, which is 2, but it is more manageable, if I may. It's actually 2.9% because it's just been revised this morning. So our inflation is fueled by a supply shock, which calls for a particular type of response, which brings together fiscal policies and monetary.
That the actual peak was in March, but we don't know that, and so we're not going to count on it. And we're also no longer going to count on help from supply side healing. We're gonna if we get that, that'll be great, and I think that would be enormously helpful in having a soft landing. But we're really going to be raising rates and getting expeditiously to levels that are more neutral, and then that are actually tightening policy, if that turns out to be appropriate once we get there.
But isn't it going to be hard to control inflation through tightening when a lot of it is coming from the fact that Russia and Ukraine are major exporters of so many commodities that we need? We don't know how long this war is going to go on. We don't know how long China is going to be seeing these rolling shutdowns and therefore more supply crunch. Isn't it going to be harder than normal to get a handle on inflation through your policies?
Yeah, we of course can't affect supply side issues. We really can't affect much food and energy prices either in the near term. So it comes down to what we can do is our tools work on demand. But we have a job to do on demand, and I'll go point to the labor market. There are substantially more job openings than there are people who are unemployed. And if you take total employed people plus job openings, that's demand for labor. If you look at the size of the labor force, there are more than 5 million more demand than there is supply. So we've got a demand-supply imbalance in the labor market and elsewhere in the economy. It's clear, and that comes from a number of things, including fiscal policy, including what we did at the height of the crisis. So there is a demand job to do, but you're right. We can't fix supply-side problems.
Well, impact demand?
I never would point to one particular price or asset or class of assets, but generally the way our policy works is we control one overnight rate, plus the balance sheet also has some effects, and that affects broader financial conditions, and that includes asset prices, include credit availability, risk spreads, all kinds of financial conditions. And the financial conditions, in the end, those are what affect the real economy. So we monitor financial conditions. So there really are two steps there, and one of the many. There are many different combinations that are possible of financial conditions, and we have seen some tightening from our rate increases, and that's to be expected.
So some people have this idea on that sort of thing. Do you think we're going in reverse?
No, I think we're going to revisit the terms of trade and who we are trading with and on what principles we are determined to continue trading.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And how many times Jerome has to repeat himself? We're not going back to the old economy. Because guys, we know all about the fourth industrial revolution, where the robots, algorithms, and drones take over the economy and the sheep go inside the metaverse. And then he talks about the 50 basis points. Guys, we're going to be raising rates 3 months in a row, which is going to help choke off that economy. And the IMF told the truth. We printed more money in history just to fund the fourth industrial revolution. 20% of all money in existence in 1 year. Unbelievable. And that caused global inflation. Now we had Christine Lagarde said something mighty crazy. She said if I take out food and energy, then inflation is only about 2.9%. Come on, guys. If you take out food and energy, she sounds like Jerome Powell. All of our money is going towards food and energy. Unbelievable. And we have Jerome Powell confirming that rate hikes will choke off the stock market. But guys, remember, BlackRock bought a lot of these stocks. Aladdin controls a lot of the market, guys. It's nothing but an algorithm. But Jerome Powell said something very interesting. He said that this is a favorable job market, and that's going to change. And guys, we know it definitely is. You have a lot of jobs that were paying $7 to $10 an hour. And we know the big corporations are cranking up automation. They're getting ready to run right through this economy. And we also had Christine Lagarde finish up speaking about trading partners. And this is going to be so important because we know we're about to go through a paradigm shift. It's all about China and the Belt and Road. It is order out of chaos. The fall of America to Babylon and the rise of China the dragon. And remember, the crypto teacher told you because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.